So hello everyone and welcome back to this live DT marathon session. So that day we had discussed about these initial things, the definition of person, then what are the heads of income and everything, and today we shall continue from that topic. So next we have is rates of taxes, surcharge and cess. So what is the rate of tax that is to be levied? How we will come to know about the rate of the tax? So for rate of the tax, what we have is it will be defined by our Finance Act the Annual Finance Act or your Income Tax Act 1961. So whichever act is applicable, that act will define the rates of the taxes. Then surcharge is also an additional tax which is payable on your total income tax. Okay. Now, how is this surcharge levied? So, surcharge is levied as a percentage of income tax. So, whatever is your income tax, on that you have certain percentage of surcharge on crossing certain threshold limits of the income. In that cases, your surcharge will be applicable. Then on these income tax plus my surcharge, okay, so let's say my income tax is 10,000 rupees. On that, let's say the surcharge is at the 10% rate. So in that case, I don't know what's wrong with this. Okay, yeah. So let's say my income tax is 10,000 rupees. On that, let's suppose 10% surcharge is leviable. So that will give me 1,000 rupees of surcharge. Now, on what amount will I levy higher secondary education cess? So these will be always levied on income tax plus surcharge, if any, or minus rebate under section 87A. So if you have any rebate under 87A, and if you have any surcharge, so you need to add the surcharge, you need to deduct the 87A rebate, and then whatever amount comes on that, you will apply 4% of your higher secondary education cess. So here in this case it will be 11,000. Okay. On this 11,000 you will apply your plus 4% cess, and that will give you your final tax liability. Now always remember, the tax liability you need to do round off. Okay, then next we have income tax rates. So individuals, HUF, AOP, BOI and artificial judicial persons can pay tax at concessional rates under the default tax regime. So we all have, as you must be aware of, we have a section called 115 BAC wherein we are given some concessional rates. Okay, and you have tax rates prescribed by the Annual Act for the optional tax regime. So for all of these people, your individual, HUF, AOP, BOI and artificial judicial person, you have tax under 115 BAC and you have optional tax regime. Now let's see one example. Okay, so let's see the slab rates that are leviable in each of these cases. So see, if you have any income up to 3 lakh rupees, then in that case the tax which is leviable is nil. So there is no tax in case of your section 115 BAC. Okay, this isn't updated for your September exams. Okay, for September exams we have up to 4 lakh nil, then 4 to 8. 1 minute. I don't know what's wrong with my pen today. Okay, anyways. Fine. Okay, so these isn't updated. The updated things that is applicable for your September 2026 exams is up to 4 lakh it is nil, then 4 to 8 lakhs you have 5%, 8 to 12 lakhs you have 10%, 12 to 16 lakhs you have 15%, Then 16 to 20 lakhs you have 20%. 20 to 24 lakhs you have 25%, and more than 24 lakhs you have 30%. Okay, those are the slab rates that are leviable in case of 115 BAC. And then for the optional tax regime, that is your alternate tax regime, we have the slab rates as up to 2,50,000 you have no tax. Then from 2 lakh to 2,50,000 till 5 lakh rupees you have 5% of total income. And in case if your income is crossing 5 lakh rupees but it is less than 10 lakh rupees, in that case you have 12,500 plus 20% of total income, which is more than which is exceeding your 5 lakh rupees. And if you have any income more than 10 lakh rupees, then in that case you have 112,500 plus 30% as your tax liabilities. Now, for a senior citizen, being a resident individual of the age 60 years or more but less than 80 years at any time, okay, so your these first limit will change to 3 lakh. And if you have any very senior citizen age more than 80 years, then your this 3 lakh will change to 5 lakh. And for certain income like long-term capital gains, lottery income, specified short-term capital gains, etc., they are taxable at special rates. Okay, so we have some special rates of taxes which we will come to know later. Now, concessional tax rates under the default tax regime under section 115 BAC. So which are the conditions that you need to fulfill in order to avail this concessional rates of tax? So we have certain deductions or exemptions which are not allowable. Okay, so which are the exemptions or deductions that are not allowable in 115 BAC? So first one we have is your leave travel concession under section 10(5). Then you have HRA under section 10(13)(a). Then exemption in respect of special allowances or benefit to meet expenses relating to duties or personal expenses 10(14). Then we have section 10(17), which is your daily allowance or constituency allowance of PMs and MLAs. Sorry, MPs and MLAs. Then under section 10(32), you have exemption in respect of income of minor child included in the income of parent. This is 1,500 per child. Okay. Then you have section 10 double. Okay, but these are not allowed in your 115 BAC. Then we have tax holiday for units established in cess under section 10 AA. Then we have entertainment allowance and professional tax under section 16. Then we have interest on loan in respect of self-occupied property. Remember these one. Okay, these are some important ones. Then you have additional depreciation under section 32(1). Then you have deduction in respect of contribution to notified approved research association, university, college or other institutions for scientific research under your section 35(1) and under section 35(2) AA. Any approved Indian company for scientific research or notified approved research association, university, college, other institutions for research in social science or statistical research, and an approved national laboratory, university, IIT specified person for scientific research undertaken under an approved program. So if you have any of these amounts which you have donated to such people, which you have given to such people, then in that case it is not allowable under your 115 BAC. Okay. Then we have section 35 AD, which tells us investment linked tax incentives for specified business. So that is a deduction related to specified business, which is again not allowed in your 115 BAC. And for deductions from ATC till ATU, okay, those are the deductions under your chapter 6A. Now, the only deductions that are allowable in 115 BAC is your employer's contribution towards NPS under section 80 CCD2, central government contribution towards Agnipath scheme under section 80 CCH2, and deduction in respect of employment of new employees under section 80 JJAA. Okay, so only this much are being allowed. Rest all the deductions from ATC till ATU are not allowed in your 115 BAC. Then next we have certain losses not allowed to be set off. So while computing the total income, set off of any loss. So if you have any carried forward or depreciation from any earlier assessment year if such loss or depreciation is attributable to any of the deductions referred to in one above. So if you have any depreciation or any carried forward loss attributable to all the things which we just now discussed, okay, so in that case even those losses or that depreciation will not be allowed. Then if you have any losses under house property with any other head of income, okay, so loss of house property in case of 115 BAC is only allowed against income from house property and it is not allowed to be set off against any other income head. The next we have depreciation or additional depreciation. So depreciation under section 32 is to be determined in the prescribed manner. Depreciation in respect of any block of assets entitled to more than 40% would be restricted to 40% on the WDV of such block of assets. Okay. So the maximum allowable rate of depreciation in case of your section 115 BAC is 40%. You cannot claim any depreciation above that amount. And you can also not claim the additional depreciation under section 32(1)(2)(a). Then next we have exemption or deduction for allowances or perquisites. While computing total income, any exemption or deduction for allowances or perquisites by whatever name called provided under any law for the time being in force in India would not be allowed. Okay. So if you have any other exemption or deduction, okay, the whatever may be the name that is being given, so while calculating your total income, that will also not be allowed. Now we have additional points. So what does your additional points say? That an employee whose income is chargeable to tax under section 115 BAC would be entitled for, in case of salary income, standard deduction under. So these are the things which are allowed to people who are opting for tax under section 115 BAC. So in case if you have salary income, then you will get your standard deduction of rupees 75,000. Then in case of income in the nature of family pension, so if you have any family pension income, then in that case what you will be allowed is a deduction of a sum equal to 33.33% of such income or 25,000, whichever is lower. So in case if you have pension income, then you will do 33.33% of that income or 25,000. Okay, lower of these two amounts will be allowed to you as deduction in case if you have any pension, family pension. Then deduction under sections 80 CCD2, that is the contribution made by any employer in case of NPS, that is allowed up to 40%, 14% of salary. Then any traveling allowance will be allowed. Any daily allowance if you are getting, that is also allowed. Any conveyance allowance that you are getting will be allowed. And exemption in respect of transport allowance. So for transport allowance, the limit applicable is 3,200 per month. Okay. So exemption in respect of transport allowance granted to an employee who is blind or deaf and dumb or orthopedically handicapped. So you need to fulfill these conditions in order to claim this exemption transport allowance of 3,200 per month. So it is given to any person who is blind, deaf, dumb or orthopedically handicapped with disability of the lower extremities of the body. And remember, this is up to the extent of 3,200 per month. So if you are getting any lower amount than that, then that will be your exempt amount. Then an individual being an employee paying tax as per section 115 BAC would not be entitled for exemption or perquisite of free food and non-alcoholic beverages provided by an employer through paid vouchers. So if you are getting any food coupons, then please remember under your section 115 BAC, that is your new tax regime, these food coupons will also not be allowed to be claimed as a deduction. Then if you have any loss or depreciation referred to in 2 above, that would be deemed to have been already given effect. So if you have any loss or depreciation, then in that case that will also not be allowed for any subsequent year provided it is already given effect to. where income tax on total income of the assessee is computed under this section, and there is a depreciation allowance in respect of a block of asset from an earlier assessment year attributable to additional depreciation under section 32(1)(2)(a), which has not been given full effect to prior to assessment year 24-25 and which is not allowed to be set off in the assessment 24-25 due to section 115 BSc, then corresponding adjustment shall be made to the WDV of such block of assets as on 1/4/23 in the prescribed manner, that is, the WDV as on 1/4/23 will be increased by the unabsorbed additional depreciation not allowed to be set off. Okay, so if you have any asset on which you are not allowed the additional depreciation, then in that case what you will do is whatever is the value on 1/4/2023, to that value you will add the unabsorbed additional depreciation which was not allowed to be set off, and you will increase the WDV of that asset by that much amount as on 1/4/2023. The next we have is time limit for exercising the option to shift out of the default tax regime. So by what time should you shift out of your default tax regime? So in case of an assessee having no income from business or profession, so if you don't have any income from business and profession, in that case where such individual HUF, AOP, BOI or artificial judicial person is not having any income or from business or profession, he or it can exercise an option to shift out of the default tax regime, and such option has to be exercised along with the return of income to be furnished under section 139(1) for a previous year relevant to the assessment year. So in case if you don't have any business income or profession income, then in that case you will have the option to exercise to opt out from this scheme of default tax regime while you are filing your return under section 139(1), that is, you are filing your return before due date of the return goes. Now, in effect, such individual HUF, AOP, BOI or artificial judicial person can choose whether or not to exercise the option of shifting out of the default tax regime in each previous year. So in each previous year when you will be filing your tax of return, then in that case you will have that option whether you want to opt out from the default tax regime or not, and this option is provided to you every year. He may choose to pay tax under default tax regime under section 115 BSc in 1 year and exercise the option to shift out of the default tax regime in another year. So suppose in this year you are having more benefits in paying the taxes under section 115 BSc. So in that case you will choose section 115 BSc this year. Now let's say suppose next year 115 BSc isn't that favorable to you. So in that case you decide to go by your default tax regime. So even that option you have, that you can opt out from this existing default tax regime and you can go to your normal tax regime or your alternate tax regime. Then in case if the assessee is having any business or professional income, then in that case what will happen? See, again you will have the option to exercise before the due date specified under section 139(1) for furnishing the return of income of the previous year, and please remember this is important, and once such option is applied, see, once such option is exercised, it would apply to subsequent assessment years also. So once you are exercising the option, it will be applied to subsequent assessment years also. Such person who has exercised the above option of shifting out of the default tax regime for any previous year shall be able to withdraw such option only once and pay tax under the default tax regime under section 115 BSc for a previous year other than the year in which it was exercised. So the option to opt out from your default tax regime you will get only once, okay, and only for once you will get the option to withdraw, and you need to pay tax under your default tax regime under section 115 BSc for a previous year other than the year in which it was exercised. So the option you would have exercised in some other year and in some other previous year, you will be allowed to pay tax under your default tax regime of 115 BSC. And now see, please remember this next line what this says. Thereafter, such person shall never be allowed to exercise option to opt out of the default tax regime except where such person ceases to have any business, in which case option under 1 would be available. So, once this person chooses to opt out from the default tax regime, then that person is never eligible to again opt for the default tax regime, except the person is only allowed in case the person closes the business and has to opt as per your option number 1. Okay, the next we have alternate minimum tax liability is not attracted. So in which cases this alternate minimum liability is not attracted. Individual HUF, AOP, BOI or artificial judicial person paying tax under default tax regime under section 115 BAC is not liable to alternate minimum tax under section 115 JC. Okay, so if you are paying your taxes under section 115 BAC, then in that case AMT provisions are not applicable to you. Then such person would not be eligible to claim AMT credit also. So if you have any AMT credit pending, then that credit also you will not be allowed to claim. Provisions of AMT are discussed separately. Okay. The next we come to surcharge. So income tax computed above would be increased by surcharge given under the following table. So for individual HUF, AOP, BOI, artificial judicial person, if you are paying taxes under your default tax regime, that is your 115 BAC, then in that case, whatever is your total income, including dividend income and capital gains chargeable to tax under section 111A, 112 and 112A, if it is more than 50 lakhs but less than 1 crores. So if you have your total income including dividend, triple 1A, triple 112 and 112A. Okay. So for all of these, if your total income is more than 50 lakhs but less than 1 crore, then in that case the applicable surcharge rate is 10%. Now if you have your total income more than 1 crore but less than 2 crores, okay, less than or equal to 2 crores, in that case your surcharge applicable is 15%. Now, in case if your total income excluding, please note the difference between these two. Okay, till here it was including what? Including dividend income, then your 112 income, 111A and 112A income. If these four are included, in that case, if your income is more than 50 lakhs, less than 1 crores, surcharge applicable is 10%. If your total income including dividend triple 1A, 112, 112A, in total income including all of these more than 1 crores but less than or equal to 2 crores, then the surcharge applicable is 15%. Now, if I have total income excluding dividend 111A, 112 and 112A. So excluding these four incomes, if my total income is exceeding 2 crore rupees, in that case the surcharge applicable under 115 BSC is 25%. Remember, in this case the surcharge on dividend 112A, 112 and 111A, these four incomes, the maximum surcharge applicable under section 115 BSC is 15% only. Then total income, if total income including dividend income and capital gains chargeable to tax under these sections is more than 2 crores in cases not covered in 3 above. So if you have any total income which is more than 2 crores, okay, and which is not including your dividend income, your 112A, your 112 and triple 1A, in that case the surcharge applicable rate will be 15% only. Now let's see for the person exercising the option to shift out of the default tax regime and paying taxes under the normal provisions of the act. So in that case, if you have your total income, again see here also the same provisions. First two are for including this incomes, and next two are for excluding dividend income, capital gains under section 111A, 112 and 112A. So if incomes excluding these income is crossing your 2 crores of amount, but it is less than 5 crores of amount, then the surcharge applicable will be 25%. Okay, and for dividend income and capital gains chargeable to tax under section 111A, 112 and 112A, the surcharge will again be same as 15%. So the maximum surcharge that is leviable on your dividend 111A, 112 and 112A, these four incomes, the maximum surcharge that is leviable is 15%, be it your default tax regime or your alternate tax regime. And remember, for your alternate tax regime, if you have total income exceeding 5 crore rupees, then the maximum surcharge that is leviable is 37%, while the maximum surcharge leviable in case of 115 BAC is 25% only. Then, income tax in case of firm, LLP and local authority. So, on whole of the total income, tax is leviable at 30%. And for capital gains under section 112, 112A and 111A, we have special rates which are prescribed. And for surcharge, if the total income is more than 1 crore, then 12% of income tax computed as above will be your surcharge. Then in case of cooperative society, the rates of income tax for cooperative society. So for that we have this flow chart. So let's understand. Is cooperative society resident in India and engaged in manufacturing or generation of electricity? So first question is whether it is resident and engaged in manufacturing or generation of electricity. So if your answer is yes, you will go to the next question. Is it set up and registered on or after 1/4/2023 and commenced manufacturing or production or generating electricity on or before 31/3/2024? So in case your answer is here, we will go to the next question, that is it opting for the concessional tax regime under section 115 BAE? If yes, we have one more question, whether 15% of income derived from or incidental to manufacturing or production or generating electricity. Okay. Then in that case, what will happen? If the total income is less than or equal to 10,000, we have 10%. If the total income is more than 10,000 but less than 20,000, then we have 1,000 plus 20%. And in case if the income is more than 20,000, then we have 3,000 plus 30,000 of total income exceeding 20,000 as your applicable taxes. Then, in case the answers to all of these questions is no, then you need to ask just one more question. Is it opting for concessional tax regime under section 115 BAD? If yes, then 22% of the total income will be the tax liability. Now, we have certain notes for 115 BAD and 115 BAE. So, cooperative society resident in India can opt for concessional rate of tax under section 115 BAD or 115 BAE as the case may be, subject to certain conditions. Then capital gains taxable under your section 112, 112A and 111A, casual income taxable under section 115 BBA, etc. are taxable at special rates specified in these sections. So we have certain special rates for all of these sections, your 112, 112A, 111A and to casual income or taxable under section 115 BBA. Then these sections are not in your course right now, they will be taken at your final level. Now surcharge in case of cooperative society. So if your cooperative society is opting under section 115 BAD or section 115 BAE, then in that case you will have only 10% of income tax including tax payable at special rates irrespective of the amount of total income. So whatever is the amount of your total income, the maximum surcharge leviable in case of section 115 BAD or section 115 BAE is 10%. And in case if your cooperative society or is not opting for section 115 BAD or 115 BAE, in that case up to 1 crore rupees there is no surcharge. Then for income exceeding 1 crore but up to 10 crores we have 7%, and for income exceeding more than 10 crores we have 12% of income tax as your surcharge. The next we have company. So in case of company, if it is foreign company, then in that case for other income you have 35% of total income, and for income of royalties and fees for technical services, that is your FTS income received from government or an Indian concern in pursuance of an agreement approved by the central government made by the company with the government or Indian concern between 1/4/1961 and 31/3/1976 in case of royalties, and between 1/3/1964 and 31/3/1976 in case of FTS. In that case, you have 50% of total income as your tax liability in case of foreign companies. And in case if your company is opting for concessional rate under regime 115 BAA, then in that case we need to check one more question. Okay, so this is part of this domestic company. So for foreign company you have two rates, 35% and another is your 50%. So in case if you have these fees from technical services received from government, you need to check the dates specified. In that case it will be 50% of your total income. And for domestic company, if it is engaged in manufacture or generation of electricity, then again you will ask whether it was set up on or after 1/10/19 and the generation of electricity began before 31/3/2024. If the answer is yes, you need to ask whether they are opting for section 115 BAB. If yes, then the rate applicable is 15% on income derived from incidental to manufacturing or production of generating electricity. And in case if your answers are no, then in that case you need to check whether it is opting for 115 BAA. In case it is opting, then you will have 22% rate, or otherwise you will have one more question to be asked, that does its total turnover or gross receipts for financial year 22-23 is less than or equal to 400 crores. If it is less than or equal to 400 crores, then again the applicable rate will be 25%, and if no, then in that case the applicable rate will be 30%. Then for section 115 BAA and 115 BAB, okay, so domestic company can opt for section 115 BAA or section 115 BAB as the case may be, subject to certain conditions. And capital gains taxable under section 111, 112, 112A and 111A. Casual income taxable under section 115 BBA are taxable at special rates. Okay, so you have special rates for these incomes, and again this are taken at your final label. Now surcharge in case of foreign company, if the total income is exceeding 1 crore, then up to 1 crore, okay, less than or equal to 1 crores, you don't have any surcharge. From 1 crore till 10 crores, you have 2%, and if the income is exceeding more than 10 crores, you have 5% of income tax as your surcharge in case of foreign company. And in case of domestic company, which is not opting for any concessional tax regime under section 115 BAB or 115 BAA, then in that case, if the total income is less than or equal to 1 crore, there is no surcharge. From 1 crore up to 10 crores, you have 7%, and in case if the income is exceeding more than 10 crores, then in that case you have 12% of income tax as your surcharge. And in case if you are opting for concessional rates under 115 BAB or 115 BAA, then in that case surcharge is only 10% irrespective of the amount of the total income. Then next we have special rates of tax in respect of certain incomes. Okay. So if you have section 112, then in that case it is for long-term capital gains other than long-term capital gains taxable as per section 112A and mentioned in 2 below, arising from the transfer of capital asset which takes place before 23/7/2024. So any transfer of long-term asset before 23/7/2024, then in that case you have 20% with indexation benefit. And if from the transfer of capital asset which takes place on or after 23/7/2024, then in that case for the transfer for any asset which is acquired before 23/7/2024, you have two options. Either you can take 20% with indexation or 12.5% without indexation, whichever is the lower amount. By that amount you will be paying your income taxes. And if you transfer of any other capital asset, then you have 12.5% without any indexation. Then long-term capital gains arising from transfer of unlisted securities or shares of company in which public are not substantially interested by non-resident assessee. If the transfer takes place before 23/7, then you will have 10% without indexation and foreign currency fluctuations. And in case your transfer takes place after 23/7/24, then you have 12.5% without indexation and foreign currency fluctuations. And for section 112A, it is long-term capital gain on transfer of equity share in a company, unit of a equity oriented fund or unit of business trust. And the rate leviable is 10% on long-term capital gains exceeding 1.25 lakhs. Okay. So long-term capital gains up to 1,25,000 will be exempt, and balance amount if any beyond 1,25,000 will be taxed at 10% if the transfer takes place before 23/7/2024. Please remember these dates, they are very important. Then, what is the condition for availing the benefit of these concessional rate? Now, the only condition is that securities transaction tax should have been paid. In case of equity shares in a company, it should be paid both at the time of purchase and at the time of sale. And in case of unit of equity oriented fund, it should be at the time of transfer. So at the time when you are selling, at that time STT should have been paid. And the rate applicable is 12.5% on long-term capital gains exceeding 1.25 lakhs if transfer takes place on or after 23/7/2024. Then we have section 111A, which is for short-term capital gains on transfer of equity shares in a company, units of equity oriented fund or units of business trust. The rate applicable here is 15% if the transfer takes place before 23/7/2024 and 20% in case the transfer takes place on or after 23/7/2024. Okay, and the conditions are that these transaction of sale of such equity units, equity share unit, should be entered on or after 1/10/2004 and such transaction should be chargeable to securities transaction tax. Then section 115BB, which says winnings from lotteries, crossword puzzles, races including horse races, card games and any other games of any sort, gambling or betting of any nature or form will be levied tax at the rate of 30%. And remember, for these incomes you will not be allowed to claim any deductions, any expenses, or even if you have any losses from these incomes, you will not be allowed to set them off against any of these incomes too. So if you have any of these incomes, what you will do is directly you will apply 30% of tax. Then in case of 115BBJ, net winnings from online games, again here without claiming any expenses, any deductions, any exemptions, you will directly apply the rate of 30%. Then 115BBE, if you have any unexplained money, investment, expenditure, etc., which is deemed as income under section 68 or section 69 or 69A or 69B or 69C or 69D. So any unexplained money, investment or expenditure which you have income under your section 68 or any section 69 subdivisions, then the rate applicable is 60%. Now we have rebate under section 87A to resident individuals. Remember, 87A rebate is only allowed to resident individuals. So this okay, so for these rebate we have two sections again, your 115 BSc and your optional tax regime. So in case of 115 BSc, here again this is 12 lakhs, okay, and this is same, and this is your 60,000, and this is same. Okay, so income up to rupees 12 lakhs, you will have a maximum rebate under section 87A, 115 BAC, 60,000 amount, and in case of alternate tax regime, total income up to 5 lakh rupees will have maximum rebate of 12,500 or your income tax whichever is lower. Now, in case of resident individual paying tax under 115 BAC, and if total income of such individual is more than 7 lakh rupees, and this is not 7 lakh rupees, this is 12 lakh, okay. So in case if you have income less than 12 lakhs, then what you will do is, first you will calculate the total income minus 12 lakh rupees. Then what you need to do, you need to compute your income tax liability on your total income. And if your B is less than A, then rebate under section 87 would be given. So they have given one formula. So that way you can calculate the rebate which is allowed under section 87A. So, the rebate under section 87A shall not exceed the amount of income tax on the total income of the assessee, and rebate is allowed from income tax computed before adding this higher education cess. Please remember these, okay. So, you need to calculate your rebate, okay. Before rebate is allowed on income tax computed before adding your higher secondary education cess on your income tax. Okay. Then rebate is however not available in respect of tax payable at 10% on long-term capital gains taxable under section 112A. So if you are paying section 112A tax at the rate of 10%, in that case rebate is not allowed. Okay, which means rebate is allowed in your section 111 and 112. Okay. Now we come to the next chapter, that is residential status and scope of total income. Okay. So residential status of an individual, how will you find out the residential status? So we will check 2-3 conditions. Has he stayed in India for less than 60 days in the relevant